This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping the show on January the 10th, 2014. Our time is 8:48 in the morning Mountain. Radio show runs on your favorite radio stations as well. The shows are archived, streaming at hesradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes. Type in World Financial Report on Radio. The podcast is there for your portable device. We go anywhere you go. iTunes, World Financial Report on Radio. Harold does daily market commentary as well on his site. You can find that on the podcast site as well. As we tape today's show, not a surprise, I think Obamacare is having a huge impact on the jobs numbers out of the United States. Job report this morning out of the United States. They had been expecting 200,000 new jobs. They got 74,000 new jobs. And this really tells you how out of skew the numbers are. ADP came out with a report yesterday saying the U.S. economy had gained 230,000 new jobs. You've got to question the numbers. The unemployment rate went from 7% to 6.7%, largely because of the labor participation rate, down to 62% in the United States. That's how many people participating in that market, a 1978-year low. In Canada, we lost 46,000 jobs. Not good news at all. As well, overseas, in the Euroland, 12% unemployment. In Spain, youth unemployment, 58%. They have surpassed Greece now, which is right around where they are. There are 3 unemployed Americans for every job opening. 1,600 people applied for 36 jobs at an ice cream plant, and poverty levels broke a record, a 50-year high here recently under the U.S. President Barack Obama. Harold, we've said this so often during our show over the last year. Don't confuse manipulated stock markets because of quantitative easing with what's happening in the real everyday economy. People are hurting in the United States. They're hurting over in the Eurozone. Don't be confused with what's happening in the stock market with the real economy. And we're starting to see it with the jobs numbers, and it would not surprise me at all if a lot of this has to do with Obamacare. You have the average everyday person, maybe they were paying $1,500. Suddenly they're paying $3,000 or more for their health care. If you're a business, why would you be hiring under those circumstances? You wouldn't.
Randy, I'm sitting here shaking my head. You know, all this horrible news, and the stock market keeps hitting record highs. I mean, it's an unbelievable thing, and you got to sit there and almost laugh as to how blatant, you know, this manipulation is. There's absolutely no way. You don't hit your job numbers. In fact, you're so far away from the job numbers, it's not even funny. However, the unemployment rate drops from 7 to 6 points. It makes absolutely no sense. And almost all the jobs that were created under the Obama government thus far have been low-paying jobs and part-time jobs. So basically, when you take those numbers, it just doesn't make any sense. And what's happening is that people that used to make $100,000 a year, they're being offered jobs at $25,000 or $30,000 a year. They're not taking those jobs, so those people aren't even in the workforce at this point because they're not going to work for that kind of money. And what you just said, by the way, Randy, about Obamacare is so 100% correct, because what you're seeing is that these additional expenses for Obamacare are being passed on to the employers, who are obligated to pay health insurance for their employees. But that's for full-time employees. So the bottom line is that the way that corporations are going to get around that is they are only going to hire part-time people. And part-time people do not get those benefits. So, again, what good is he doing for the economy and for the hard-working Americans when they're just going to end up getting screwed because of this? So it's really an unbelievable time in history. And, you know, those of us that I think are much more pragmatic, that look at the world economy and the U.S. economy, especially at this point, in an intelligent way, you sit there shaking your head. You're saying, how in the world could could people really be buying the news that's coming out of the United States? Again, we've said it ever since this chart came out about a month ago. It's literally impossible for the S&P 500 to hit record numbers when there is no growth in the United States. The GDP proves that. They had a chart, and it was in our newsletter, and if you haven't seen it, we'll send it to you again, but it shows the S&P 500 chart at record highs, which it is basically, in and around at this price, but then it shows the GDP, the gross domestic product, which is the growth of the United States, and it's basically at zero. So that doesn't make any sense whatsoever. That leads to the, again, obvious conclusion that they're supporting the stock market, and it's basically only makeup. Because the fact is that we've read several reports lately that the insiders, the people in the know, are selling their stocks, and who's buying the stock? It's the general public that always ends up buying at the wrong time. It happened in every single bull market that's ever been in the United States. You get the insiders that make all the money, ride the stocks up because they're in the know, they know what's going on, and then on top of that, they hype the stock market to such an extent that people feel that they're missing out. And that's when the general public that really knows very little about investing in that type of an arena, they go into the market, they buy it at the extreme high, and then the market plummets. There's several reasons why the stock market is going to plummet, and several reasons at this point that you do not want to be buying the market at these ridiculous levels. And again, you never want to buy into a market like a stock market here in the U.S. that is not moving up based on fundamentals, because the fundamentals here in the United States are not conducive to a stock market going up. In actual fact, as crazy as it may sound, the fundamentals are much stronger for precious metals and hard assets than it is paper assets and stocks. But again, you've got this scenario going on where the U.S. and the Federal Reserve has put trillions and trillions and trillions of dollars back into the marketplace with the sole goal of getting more people back to work. That corporations are doing better, that the economy is doing better, that they're hiring full-time people, and people's income is going up. That just isn't happening. So how in the world is the stock market hitting these ridiculous levels when 50 million people in the United States are on food stamps and 75% of the population is living paycheck to paycheck? Don't get sucked into this. This makes absolutely no sense. And again, when people sit back and think that people are making money in a different arena, you have no idea how many phone calls, Randy, that I've received over the past couple months on Bitcoin. And basically because it's in the news and it's being hyped and they see prices going up, it lulls the investor that really doesn't know anything about these markets because, the goal is to make money. But these are speculative markets now. These are not the stock markets, when our grandparents were around, and actually when our parents were around. I remember my grandfather telling me to buy General Motors so many years ago and put it into a portfolio and you would retire comfortably. If he knew what happened in 2008 and 9, again, he would just be blown away by it. So please do not get lulled into a false sense of security. There is nothing happening in the United States at this point that is bullish. Otherwise, we would be telling you about it. Excuse me. I'm a Canadian living in the United States for the last 32 years. I've been in the commodity and hard asset business for 35 years. I've been on the radio for 20 years, and again, my strength in this business is determining which way markets are going to trend. Back 13, 14 years ago when this show first started, gold was at $250. Nobody was even recommending gold at that point. We did because the fundamentals in the market were starting to shift toward that type of asset, and we started making recommendations that people thought that were absolutely ridiculous and reckless. As it turned out, gold went from $250 all the way up to $1,900, and silver went from $380 all the way up to $50. And again, we weren't so crazy at that particular point. Believe me, ladies and gentlemen, I've not lost my touch. I know these markets extremely well. It's extremely frustrating for somebody like myself and other analysts that have been very accurate over the last 15 years to accept what's happening at this point. Basically, I still see the fundamentals in the market as very, very strong towards precious metals and hard assets and oil and inflation. And what's happening at this point is that interest rates are being kept extremely low. So basically, with extremely low interest rates, what that does is it reduces the value of the U.S. dollar. There's a direct correlation between gold and the U.S. dollar, and it's happened every single time that there's been this type of situation where gold and silver, I count them as one, and the dollar go in opposite directions. Because when the U.S. dollar falls, gold goes up. It's an action-reaction type of market. At this point here, the U.S. dollar is extremely weak, and gold should be going up tremendously, but it's not. Right now, and we're having a good day in gold here on Friday, gold's up $16.50 on the day. It's trading at $12.45. Silver's up 55 cents on the day and trading back over the $20 level. But basically what we're looking at, again, is the support and resistance levels in the gold and silver market. The heaviest support level for gold is at 1187. That's where the market came down from its high of 1920, and we've seen that price 3 times now. It's what is called a triple bottom, and that's a very good signal for gold. It shows that there's very heavy support in gold at that 1187 level, and it would be difficult for gold to break that level on the downside. Now, we're trading at 1245, and the heavy support for gold at 1187, so basically we have a fairly nice buffer there. However, with what's been happening in the markets and how these banks have been manipulating the price of gold down, if gold was to break the 1187 level and have a couple closes below that, the market could fall further. However, the fundamentals for gold are extremely strong, and the strongest sentiment for gold should be that the U.S. dollar is trading at 80 cents right now. And to put things into the proper fashion so you understand what I'm talking about, that in 2011, when gold hit 1920 and silver hit its all-time high of $50, the U.S. dollar was down to 72.5 cents, the lowest level that the U.S. dollar has hit in decades. So basically, there's the correlation that I'm talking about. Gold prices hit record highs at 1920 as the U.S. dollar is hitting record lows at 72.5 cents. Then we saw what happened in 2011 when the price of gold and silver was forced lower. And when I say forced lower, it was done that on purpose, and the way that they did that was by raising the margin requirements, making it so expensive for futures traders to trade gold and silver that they lost interest in that market and the prices fell. The real reason that I believe that occurred was not because necessarily the U.S. government was concerned that gold is sending the wrong signal, that the economy is not progressing. The real reason is these ETFs, these exchange-traded funds. People were buying so much gold and silver through these exchange-traded funds known as ETFs that are traded on the stock market that basically they bought so much gold and silver that there was not enough gold and silver to back up these ETFs or the futures contracts. So it got out of hand, and so much gold and silver was purchased that what they had to do, which is very similar to what they did in 1980, was brought down the price purposely so people would sell out, so there wouldn't be that disparity between the futures market and the physical market, because every ETF, if you buy 100 ounces of gold on an ETF, they've got to have 100 ounces of gold to back it up. So there was millions and millions and millions of ounces of gold and silver purchased through these ETFs, and there was not enough gold and silver physically in the warehouse. So what does the government do? They bring down the market, force people to sell out. It's the most illegal thing that I've ever seen. However, that's the government, and that's how desperate they are at this point, and that's why that scenario happened. So, do we believe that the U.S. dollars can continue to fall? There's absolutely no way in the world that it's not going to continue to fall, because interest rates are at zero and they continue to print money. And the more money you print, the lower the dollar is going to go. So there's going to reach a point within the foreseeable near future that the U.S. dollar is going to break below the next important support level, which is 78.5 cents. And when that does happen, watch for the U.S. dollar to plummet and watch for gold to skyrocket. Now, again, we're not going to get that orderly market that we saw for the last 13 years, minus 2013. We're going to see spikes in the market that defy description. You're going to see similar market conditions to what happened back in 1980, and if you haven't seen the chart on silver, you're going to have to take a look at it. So we'll send it to you if you want to see that. But all in all, there is no doubt in my mind that when everything settles out and people really realize what's happening in this world economy, especially in the United States, the place to have your money is in physical gold, silver, other commodities, and diamonds, which we're going to talk about later. But again, that's where the big money is going to be made. This is a temporary situation that has really gotten out of hand. And again, the employment situation and the weakness of the dollar is going to push hard assets, especially gold and silver and diamonds, tremendously higher than where they are right now, Randy.
The company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, Worldwide Precious Metals. Company out of Vancouver, leading Canadian precious metals bullion dealer, recommended by Harold for over 10 years. They're the experts to trust and work with in this very specialized market. It's important to them that you are educated about why you should have an allocation of precious metals in your portfolio at all times. Start your own precious metals investment account today. All gold is allocated either wholesale or premium. Worldwide is there to help you maximize the profit, minimize the risk. You will have instant liquidity in and out of the market with just a phone call, 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment. Ask about domestic or foreign storage and premium storage in specific coin and bar form. Stored metal is outside the banking system. The metal can be delivered to your door, and Worldwide has worldwide access to the physical bullion you want today. Stay away from bank certificates, ETFs, paper promises. Get the real metal from Worldwide. Their website, www.pmc.com, telephone number 1-866-623-2002. Get our free weekly newsletter from Worldwide, and they'll be happy to send it out to you. We send it out via email free of charge every week. You can go through it in 5 to 10 minutes or spend hours if you want. Educate yourself. You work so hard for your money. Work 50, 60, some even more than that every week. You're earning your hard-earned dollars. Protect those hard-earned dollars. Find out more by connecting with Worldwide Precious Metals. One of the top stories that we have in our newsletter this week, and I thought it was a very important story. It was an interview with Greg Hunter. And Greg Hunter, he interviewed John Williams. And John Williams thinks in 2014 there is going to be a crisis in the U.S. dollar which will trigger inflation. He thinks it could even be the beginning of hyperinflation. He says you're going to see early on a crisis in the dollar that will start to trigger the inflation. As inflation picks up, that's going to savage the economy. We're already in a depression. It's never recovered. Forget what you hear about the so-called recovery. The consumer is in trouble. There's nothing happening to turn the economy around. The weak economy is bad news for the dollar. Anything that would suggest deficit deterioration here and a weak economy would do that will have a devastating impact on the dollar. And if foreigners start selling some of the 12 trillion U.S. dollar-based assets, such as bonds and currency, things will turn ugly fast. He says we're dependent on the rest of the world continuing to go along with us and continuing to support the dollar. That's not going to happen. So the big question everyone is asking is, when will the buck take a hit in value? Williams says the dollar will likely begin selling off before the middle of the year, and he adds it's going to be a currency panic when the fundamental selling pressure really starts to pick up, when the sellers get heavy in turn. The weakness will be seen in a spike in oil prices and a spike in gasoline prices. And Williams says there will be a panic out of the dollar, and he predicts once you see a massive sell-off here, I see the game being over. Obviously, people would be moving into precious metals as well. One of the other interviews that Greg Hunter did during the week was with Dr. Paul Craig Roberts. And he says U.S. markets rigged by authorities, and it just blows his mind. He's an economist. He says, we have a situation where all the markets are rigged, all the markets are manipulated. As an example, Roberts points to the stock market. We have a stock market at all-time highs, and where's the economy? There's not one. There's no recovery. Dr. Roberts goes on to say 53% of Americans earn less than $30,000 per year. Well, the poverty rate for a family of four is something like $24,000. If there is no income to drive the economy and there's no credit expansion to drive the economy, then how does it go anywhere? You can't possibly have a recovery. When asked how long this can go on, he says, how long can you fool the people? When asked about the recent Fed taper of $10 billion a month in bond purchases with printed money, foreigners are getting nervous because they see the Fed creating all this new money. He thinks the appearance of cutting back the money printing is to protect the dollar. Obamacare is another headwind for the economy as monthly premiums for many double. The whole thing is constructed to produce massive income for the insurance companies, and that drains the economy. So what does Robert see in 2014? He said, I would expect this year the economy will drop again, and they won't be able to hide it, so the deficit will widen, and the widening deficit will again cause dollar worries. And who's going to finance it? And he said, basically, the Fed will have to print more dollars. Roberts goes on to say the Fed won't be able to cut back $10 billion a year. It will have to increase $30 billion a year, $40 billion a year, whatever. On gold and silver, he says the West is draining itself of physical bullion. If there is a currency collapse and you try to flee into gold, there won't be any there. The Chinese will have it. So this is the year gold and silver stage a big turnaround. It's gone on longer than I thought it could go on. I didn't realize all the deception and crooked methods they would use to rig the markets. The notion that a democratic capitalist country could have its markets rigged by its own authorities blows the mind. This is normal. What will they do next? I don't know. But that's Dr. Paul Craig Roberts, and a very smart man, Harold. I think this does mean that gold and silver, you need to position yourself. If you believe what John Williams is saying, what Dr. Paul Craig Roberts is saying, position yourself in gold and silver. We saw the unemployment numbers out of the United States today. That is an early indicator of tough economic times in the United States.
You better believe it, Randy. Again, I see it. A lot of people see it, but just not the stock traders. They're just floating on air right now. They're just euphoric. And again, if you don't pay attention, history is always going to repeat itself. And again, this is definitely a repeat of 2008 and 9 because nothing has really changed. All the brokerage firms and all the banks went back to very heavy leverage, trying to make their money back. And the fact is that the real estate market, even though they make it just like the stock market, even though they make it sound like it's doing better, it really isn't, because there's still so many foreclosed homes that they have not put on the market yet. So the banks have never recovered. Everything that they tried to do, and again, I do commend them for at least trying to do something, not just sitting there twiddling their thumbs and saying nothing we can do. They did what they thought was going to work. It's just not working. And the fact is that these job numbers are an absolute joke, and why they would even embarrass themselves by putting out those numbers is ridiculous. The other thing is that Williams is 100% right. I've traded the currency markets for 35 years. I see the exact same thing. There's no way in the world when you overproduce a commodity that the prices are going to go up. And the U.S. dollar will continue to weaken. Again, the U.S. dollar is weaker than the euro, which is in huge trouble. So that shows you how weak the U.S. dollar is. And the lower the dollar goes, the higher the gold and silver market will run. So I know it's been a tough year, 2013. I think a lot of it is going to come to the forefront this year in 2014. The first quarter, they'll sort of jockey for position, but the second half of the year, you're going to find that this market is going to be in big, big trouble, and I would not want to have my money sitting in the stock market or other paper assets. As soon as they raise interest rates, all hell is going to break loose. Stock market will fall, real estate market will fall, and the worst of all, the derivatives market will absolutely destroy the marketplace. So, again, let's be smart about this. This is not the time to speculate. This is the time to be smart about our money and put it into a safe, physical investment.
Worldwide Precious Metals. Speak with Worldwide about investing in gold, silver, platinum, palladium. Their telephone number, 1-866-623-2002. The website, wwpmc.com. One of the other stories in our newsletter this week that is a must-read, get it from Worldwide. Reinhardt and Rogoff Ken Rogoff and Carmen Reinhardt. Extreme debt means 1930-style defaults may come to much of the Western world. Debt burdens in developed nations have become extreme by any historic measure and will require a wave of haircuts, warned the IMF paper. Much of the Western world will require defaults, a savings tax, and higher inflation to clear the way for a recovery of debt levels reaching a 200-year high, according to a new report by the IMF. And they're saying the IMF working paper says debt burdens in developed nations have become extreme by any historical measure and will require a wave of haircuts, either negotiated 30-style write-offs or the standard mix of measures used by the IMF in its toolkit for emerging market blow-ups. Read that full story in our newsletter. Get it from Worldwide. Connect with them. www.pmc.com, 1-866-623-2002. Let them educate you as why is now the time you need hard assets. Well, obviously, read our newsletter this week. It's a must-read. You will read and see why what we're talking about is happening right before your very eyes. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on December the 10th, 2014. Our time is 9:16 in the morning Mountain. Radio show runs on your favorite radio stations as well. The shows are archived streaming on Harold's websites, hesradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in World Financial Report on Radio. Our radio show is portable. Goes anywhere you do via your portable device. iTunes, World Financial Report on Radio. Harold does daily market commentary. You can find that market commentary on his websites and the podcast site as well. When it comes to investing in gold and silver, there's only one company Harold recommends you use. Worldwide Precious Metals. Their website, www.pmc.com. Telephone number 1-866-623-2002. Get our free weekly newsletter from them by email, free of charge, every week. Harold's website for diamonds, rarecoloreddiamonds.com. Speak personally and privately with Harold about diamonds, 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com. And Harold has an auction site, hsfineauctions.com. And we are happy to announce our next auction will be just prior to Valentine's, February the 5th, 8 Eastern, 6 Mountain. Keep that in mind. Our featured diamond of the week. It is an extremely rare, one-of-a-kind necklace with a fancy pink argyle and a 1-carat pear-cut fancy intense green diamond. We have it on our website under Featured Diamond. You can see the video. We have a picture of it in our newsletter as well. Harold, this is an absolutely stunning piece.
You better believe it, Randy. Again, how rare is a green diamond? Most people in their life have never seen anything quite like this, and this is stunning. It's a fancy intense green, so the color is extremely intense. And again, green diamonds have got this tremendous history to them. You know, the thing about green diamonds, when they come out of the ground as a rough diamond, they had a black film over them. So people didn't know, and cutters didn't know, that they were green. They thought they were black diamonds, and basically sold them as black diamonds at $300 to $400 a carat. When they peeled back the skin and discovered that there was actually green, that's when they realized that the prices of these green diamonds are $300,000 to $400,000 a carat, not $300 to $400 a carat like a black diamond is. The chances of getting a pure green diamond today is slim to next to none. They're ridiculously rare. We do have them. Actually, we're the largest dealers of green diamonds, and I've got the matching ring for that also, a magnificent green diamond ring surrounded by pink, gorgeous diamonds. What a color combination that is. These diamonds do nothing but go up in value. In actual fact, the interesting thing about green diamonds is that when a green diamond comes out of the ground as a rough diamond, what is supposed to happen in order for this process to go properly is that the owner of that diamond, the miner, if he sells it to a cutter, which he's going to eventually do, they take it to the Gemological Institute of America, GIA, in New York, and they start the grading process as it's a rough diamond. Because if you were to bring in a green diamond that was already cut, the GIA would more than likely bring it back as undeterminable whether or not it was heat treated or not. So the only way that a green diamond will be certified by GIA is if it goes through the process as a rough diamond, and that's exactly what we've done with our greens. They're very, very, very rare. They're magnificent. My wife is a redhead, and she has a couple green diamonds, and when she does wear them, it absolutely stops traffic. They're magnificent. And again, this is the first time that we have ever featured a diamond like this in an intense green necklace surrounded by pink argyles. It's one of the most beautiful diamonds. But I'll tell you, Randy, what's happening in the diamond business in general is just unbelievable at times. We're inundated from the second we open up in the morning till we close, and then we're getting emails 24 hours a day from all over the world of investors looking to put money into safe assets. And colored diamonds are safe assets. Colored diamonds, so you know, the right colored diamonds, not all diamonds are good investments. In fact, very few diamonds are good investments. You really have to know what you're talking about and doing in order to understand what's happening in the diamond market. So basically, what we're doing, just so you'll know with our website, is we're starting a learning center where you're going to actually be able to learn and take a course on diamonds through us. So this is something that we're very, very excited about. It's in the working stages, and it's almost done. And as soon as it's done, we will bring it to you, where you will literally be able to study materials about colored diamonds and about diamonds, and actually be able to take a course with us and actually get a diploma and learn more about investing in diamonds. So this is another scenario that we're bringing to you, because an informed investor is going to make the right decisions. You know, there's so many other companies out there right now that are so confusing in what they offer, because most companies do not have the wherewithal to get these type of investment diamonds. As an example, there are yellow diamonds that come from South Africa, which are the highest quality diamonds, and then there's yellow diamonds that come from India, which are of poor quality. Now, when they go to GIA doesn't care where they're from. They grade them basically on their color. But on an investment basis, a South African yellow diamond is a strong, vibrant, beautiful, magnificent diamond that has tremendous appeal to it, the color. You can just tell by looking at those diamonds that they're substantial. But then you look at the Indian diamonds, and they're very brittle, and they don't have the same shine and the same sizzle to them, and consequently they're half the price of a South African diamond. So we don't want you to be confused about putting your hard-earned money into the diamond market and not knowing what you're talking about. So we will be offering courses within the foreseeable near future that you'll be able to take in the comfort of your own home. They'll be free of charge. We want you to learn everything that you can about the diamond industry so you make the right informed decision. And again, we're the only company that brings that to you. On top of that, as Randy mentioned, we're having an auction on February the 5th, just prior to Valentine's Day, and we're going to be offering some magnificent pink diamonds. In fact, I know for a fact that there's a pink heart-shaped diamond ring going to be offered at a really great price. So make sure that you sign up for that auction. It's in the comfort of your own home. We're the only company that produce the secondary market to resell your diamonds for you. So also keep that into consideration. It's one thing to be able to invest in a diamond. It's another thing to be able to sell it. And we built 8 Siegel Fine auctions for our clients to be able to resell their diamonds. And that's exactly what we do. We make 10% of the profit when you sell. So if you don't do well, we don't do well either. But believe me, I know this diamond business. I've been in the investment business 35 years, and this is one of the best investments you could that you could actually make. Now, we recommend investment quality diamonds. We have diamonds that start at $15,000. We have diamonds that go up as high as $40 to $50 million. We have 2 perfect white diamonds that are over 100 carats, and you know what happened 2 months ago. There was a 100-carat diamond that sold for over $30 million. So we do have a couple of those diamonds put away, but the majority of our diamonds and majority of our clients are hard-working, everyday Canadians that just want to make the right investment. They're getting 1 or 2% return by putting your money in the bank, and you know that by putting your money in the bank, it's not safe. It forces you, because you're getting such a low return from putting your money in the bank, which is supposed to be a safe and prudent thing to do, but you're not making any money, and inflation is higher than the 2% that you're making putting your money in the bank. So what it forces investors to do is to get into the risky markets, like the stock markets, because people see that the market's going up and they think they're missing something. Believe me, you're not missing something. The market's going to crash again, and you don't want to be in the market when that happens. However, there are other investments that give you the return that you need, because, for example, yellow diamonds, yellow flawless South African diamonds, not the Indian ones, but the South African diamonds, the one that we carry, they increase by 15% a year. Get into a 5-carat diamond, they increase by 30 to 40% a year. Get into a diamond that's yellow and flawless over 10 carats, forget about it. They double every 2 years in value. Those are investments. Those are the type of investments that are safe. They never ever decline in value, because how many 10-carat yellow flawless diamonds are for sale in this world? I can assure you there's maybe a couple, and they're both on my website. So basically, you want to look at yellow flawless diamonds. They start at about 15 to 20,000. They increase by about 15% a year. It means that a $20,000 investment in the yellow flawless diamond today is going to return to you in 10 years about $80,000 is what that diamond will be worth. If you were to put that same $20,000 into the bank, you're only going to make 2% a year. If you put that same $20,000 into the stock market, the chances are is that you're going to lose that money. So again, look at alternative investments. They've been around for hundreds and hundreds and hundreds of years. You know, a few weeks ago there was an auction where a magnificent vivid orange diamond was sold. It was so rare, but that diamond was originally purchased for $2 million. Then it went up for auction. They estimated it would sell for $17 million, from $2 million to $17 million. It ended up selling for $35 million, 17 times what they thought that diamond would sell for. And that isn't a fluke. It happens all the time. In fact, during that same period of time, the diamonds that went up the most in value were the lesser priced yellow diamonds, the ones that were 1 and 2 and 3 carats. Diamonds that were supposed to sell for $15,000 ended up selling for $45,000 and $50,000, and that's what our business is. Again, I don't want to, talk about multi-million-dollar diamonds when most of my clients invest under $100,000. And $100,000 in this market, for example, in a pink argyle diamond, could make you $700,000, $800,000 in profit, because the mine that produces these pink diamonds is going to close in the next 6 years. So if you are going to invest in diamonds, and we do recommend it, but we want to educate you. We want you to understand what you're investing in. And again, an informed investor is a type of investor that we like to deal with. So within the very near future, you're going to be able to sign up for a course on our website and take this course in the comfort of your own home. And once you pass it, you will get a diploma. But the most important thing, you'll be much more aware of what's happening in this type of investment. Again, I've been in the investment world for 35 years. I don't see a better long-term investment than diamonds. And again, you don't buy a diamond today and sell it in a year or two, you're not going to make any money. You're defeating the purpose of doing this. The longer you hold on to the diamonds, the more and more and more they go up. A diamond that I bought in 2003 for $350,000, a 2-carat vivid pink tender diamond, is now worth close to $4 million. That happened over a 10-year period. I've mentioned many times on the show my wife's girlfriend, who inherited a 5-carat pink from her grandmother. Her grandmother bought it 50 years ago for $50,000. Now the diamond's worth $5 million. So the longer you hold on to these diamonds, the more and more they're worth. And again, with all the fear and everything that's happening in the world financial markets today, the diamond market is on fire. Up until the very last day of 2013, we were selling diamonds. Clients were buying and trying to get their diamonds in before the end of the year. We've got most of the argyle pink diamonds The Argyle pink diamonds are probably amongst the best investments you'll ever make in your lifetime. They can go up 8 to 10 times what today's prices are in the next 10 years. Then you've got the yellow flawlesses that, again, go up by 15 to 20 to 30% depending on the size, and we've got more yellow flawless diamonds than anybody in the world, and we have the same with pink. So, again, Randy, I couldn't be more excited about the opportunity in the diamond market. Again, we're going to educate. We're the only company that has the secondary market to resell your diamonds. Please take that into consideration when you're looking at other companies' diamonds, again, because it's one thing to be able to buy them. It's another thing to be able to sell them, and we're the company that does that for you. So, again, we have our next auction coming up on February the 5th. Be at 8 o'clock Eastern, 6 o'clock Mountain Time. We're going to have magnificent pinks. We're going to have some beautiful jewelry, and we're going to have some magnificent coin sets from South Africa that you're just going to flip over. So, again, I can't wait for this auction. Everybody's got to sign up for it, and, again, you're going to do it from the comfort of your own home. You're going to love this auction site if you haven't seen it before.
RareColoredDiamonds.com, featured diamond of the week. Go to RareColoredDiamonds.com. Featured diamond of the week. It's a diamond, and we've never really had anything like this before. This is very rare for us. We've had some stunning diamonds, but this is a very rare piece. One-of-a-kind necklace set with fancy pink argyles and a 1+ carat pear-cut fancy intense green diamond. See the video of it on Harold's website, RareColoredDiamonds.com, under Featured Diamond of the Week. Absolutely stunning. Get our free weekly newsletter from Harold for all the latest diamond information. In fact, starting in September, that was the beginning of auction season for Christie's and Sotheby's and all the other major houses that sell diamonds. We will be happy to send those auction results out to you. Speak with Harold. We can go back and send them all out to you, and you'll get an idea exactly what the internally flawless white diamonds did, and as well colored diamonds. And colored diamonds just did spectacular at auction in the last 3-4 months of 2013. As Harold mentioned, we have an auction coming up, hsfineauctions.com, February the 5th. Harold, one thing that we should mention, because your son Jonathan came up with a very good idea for those that may want to bid on a diamond but will not possibly be around for the auction. Maybe you can explain how that will happen.
Yes, we have a feature now in our auctions that if you cannot attend, you can put in a bid beforehand. So, again, you can actually go right onto the website, H. Siegel Fine Auctions or hsfineauctions.com, and when we put the catalog up, which will be up early next week, anything that you want to bid on, if you're not going to be there, you can put in a pre-bid and still participate in the auction without actually being there. So it's a feature on our site that is very unique, but the website itself is just spectacular. There's not another site in the world that does what our site does. eBay is obviously a very, very successful company, but when you go on eBay and you find what you want to bid on, you'll type in your bid and you'll work it over 2 or 3 days type of thing, and obviously a very successful business. But when we're building H. Siegel Fine Auctions, I insisted on the fact that these diamonds have got to be sold. They've got to be talked about. People have to understand what the clarity is and everything about it and the history of the diamond. So we opted to build an auction business that is live and real time. There's not another company in the world like it. So you could basically be sitting in your home in Edmonton or in Calgary, in Toronto or in London, England or in China or whatever and participate in our auction, and it is so much fun. We've got a lot of people that attended, but every time we have an auction, we have new people that are looking. So you could literally sign up for the auction and not even bid if you don't want to, just basically observe for the first or second time. But it is so much fun. It's so exciting. There's so many great deals there. And again, people love auctions. So the reason we built it is because it's something that the diamond business desperately needed. And basically, I think it's our biggest contribution to the diamond business is building this secondary market to resell diamonds. And it's so popular that Bloomberg, the radio station, and TV station, Financial, has had us on 3 times in the last 6 months. They're in love with that market. Again, we've auctioned off some amazing pieces, and this auction coming up is going to be spectacular. It's going to be very special for Valentine's Day. There'll be pink Argyle diamonds. There'll be other pink diamonds. There'll be some pink diamond rings. There's going to be coin sets that are extremely valuable. We may have a ruby and a sapphire up there. It's going to be one of the best auctions we've ever had, and there are going to be gifts for Valentine's Day, and again, I think everybody's going to want to attend this auction.
We do have the video of Harold on Bloomberg. Of course, he was on Bloomberg Radio with Pim Fox and Carol Masser talking about hsfineauctions.com. Next auction, February the 5th. And he was on the TV station Bloomberg as well. Obviously, you can get that on your cable provider. You can watch it on your portable device. You can watch it on your computer. You can watch it on your TV. Bloomberg available throughout Canada. And Harold was on twice, interviewed by Carol Masser and once by Deirdre Bolton, both on money moves. And we have both of those interviews. And I think the thing that is so important to understand is that I watch Bloomberg all the time. And I have never seen anyone come on Bloomberg the way Harold did with the diamonds that he had and cause the attention to be drawn on him and those diamonds. It was just amazing to see. When you walk in the room and you have Liz Taylor diamonds, or you have pink, yellow, and internally flawless white diamonds or blue diamonds that are absolutely stunning, and they're there with you as you're doing the interview, trust me, it takes the interview to a whole new level. When those hosts are putting on Liz Taylor diamonds, think about it. Liz Taylor wore these diamonds, one of the greatest actresses in the history of the world and one of the great collectors of diamonds. They wore her piece during the show briefly, and both of them were just absolutely in awe of having that Liz Taylor diamond around their neck. Watch these interviews. If you're new to listening to our radio show, have not seen these interviews, Harold will send them to you. But Harold, it was an outstanding year for rarecoloreddiamonds.com, and we got off to a great start with the featured diamonds we've had the last 2 weeks, and I can't encourage people enough to sign up for the auction, hsfineauctions.com. We should stress you do not have to buy anything. If you just want to sit back, acclimatize yourself to what's going on, get comfortable, make a bid at that point, or maybe you're in a situation where you want to place a bid on an item, but for whatever reason you're going to be out of town on holidays or not there at that exact moment, we can take care of that issue now too. You can place a bid and it will be on file. But Harold, we have about 2 minutes left. As we get into 2014, 2013 was just outstanding for Rare Colored Diamonds, but the way things are shaping up in 2014, it's even going to be a better year.
It is, because again, I expect that the economy is going to go south, especially here in the U.S., and when stocks start to sell off, you're going to see a lot of money sitting on the sidelines, and a lot of it goes into assets like this. We've been crazy busy from the day we opened up on the back on the 2nd, and again, it's just an indication that people are nervous and they want a secondary market. They want another type of investment that is safe, portable, private, that nobody knows about, that can make them money, and that's the diamond market. Again, we're very pleased to bring to you our selection of amazing diamonds. Look at the yellow flawlesses. They started about $15,000-$20,000. Look at the Argyle pinks. They started about $25,000-$30,000. Those diamonds will give you tremendous returns with a lot of safety. We're very excited what's going to happen this year on the diamond market.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
hsfineauctions.com. Next auction, February 5th, 8 Eastern, 6 Mountain. Rarecoloreddiamonds.com. The website. Take a look at our featured diamond this week and connect with Worldwide Precious Metals. If you're interested in starting your own precious metals investment account, they will educate you and help you with that process. Connect with them, wwpmc.com. The telephone number, 1-866-623-2002, 1-866-623-2002. And one of the things we touched on a past show is the Volcker rule and how that could be very advantageous to precious metals going forward. Speak with Worldwide. Let them educate you as to why they believe this could have a huge impact on the precious metals markets. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.